All right, let's get going. So I mentioned a moment ago that I did an audible. Scan tablets. Okay, Lewis, I'll talk about that tab. And rather than do my weekend review, I decided to go record that. I've already posted it, Top Down Trader. I'm going to go back and it's not repeating what I did in Phoenix, but Phoenix was kind of funny. There were a couple of newbies coming. So I said that I'd start, I think we did it Friday, Saturday, Sunday was the program, but I'd be there Thursday afternoon. And for the newbies, I'd walk through a little bit about what I do with the platform and things. And everybody showed up. So then I put it online because I originally wasn't going to do it online. And actually, I thought a lot of people thought that was probably the best part of the meeting. So I'm going to audible and do a walkthrough of the program, go through each tab, show you how I get things. I think it's still an important thing for us as we learn how to use it. I discover more functionality all the time. I also know the programmer, Praveen, who maybe he'll get up and join us today. He's on the West Coast, so it's always a little bit earlier there. And I keep thinking more things I want. He keeps putting them there. Just type a Y if you guys can see the screen. Perfect. And if you put the Y, I know that you can see me. So first, I'm going to start with a favor. I'm speaking, and I ask you guys to do this all the time. I have a very loyal following of a small number, and I appreciate every one of you. But I keep trying to get more exposure, and so I'm speaking for other events from time to time. And they don't. They basically two things happen. If I get enough people to sign up, whether they attend or not, thank you, Harold, then I get invited back. And if I get a lot of people to register, I get a copy of the attendees so I can add them to people that we can work with. So I just stuck the link in. If you haven't done it yet, if you can do it now or do it from the Top Down Trader email, I'd appreciate it. So we're going to go ahead and we're going to walk through. There's some things that have changed a little bit. Thanks, Lewis. Kathy and the rest of you have done that. Show you some things that are new, talk a little bit about the naming strangeness, and then throw something out at you to see if what interest there might be. It's not anything to buy if you already have it. Um, so again, you all know me, Jeffrey Scott, and marketmripro@gmail.com is the way you find me. This is for education only. I do this to demonstrate my tools. Obviously, it's a walkthrough. Trading involves risk, and I can buy or sell anything I mentioned. And you should always be consulting with your financial advisors. And you're probably all members of my Google group, but if not, it's called Top Down Trader. You just sign into Google Groups, you find Top Down Trader, and you link your email. It's actually, to me, it's the best way to have a mailing list. One, I don't have to do anything. But more important, I can't tell you how much I hate people that continue to spam me and send me stuff even long after I follow them. And all you got to do is unlink yourself when and I'll never reach out to you because I don't keep your email separately. Most new people are on moderation. And the reason for that is Kathy one day told me I was being spammed. And I don't know why, and it's probably bots, but I get people that sign up and they all have the same stupid letter about duct cleaning. And even if it was real, there's not really any links to click on. So I just don't get it. People just are silly. So, um, what if you post something and you don't see it right away? It's because I moderate it and then I let it through and I unmoderate you when I see you're a real person. And then most of you know that John and I are going to have a joint meeting um, Thursday, Friday, and Saturday down here in Palm Beach Gardens, Florida, November 5th through 7th. That is the link. Um, I have been told by Mary, John's wife, that we're filling up, and that whatever that means. I'm not the guy that's gonna, oh, if you don't do it in 2 hours, you're not gonna get the deal. But I know that there are some limitations in space, but it may be that the discounted hotel rooms are going away. So if you've registered, great. If you haven't and you're interested, I just put the link in to the chat area. Um, Historically, John's done 2 days. I've done 2 or 3 days. We've done them separately. Sometimes we've done them back to back, typically different locations very close to each other. But now since John's stuff is in the program, I thought it made sense to do one session. And so that will be the 5th to the 7th. And again, you get fed, I believe, breakfast and lunch, but you'll have to read about it all. I've not been as involved in the logistics, which frankly is just fine. And, really special thanks for Alan who handled all that in Phoenix for me. One call out on John. Um, those of you that don't know John well or didn't come through John, who have Sweeter Trade and are trying to figure out what to do with his tools. He has told me he has recorded 10 or 12 videos. I created a Dropbox for him, and he's been working with Praveen to get those videos to Praveen over the weekend. And hopefully, there will be a series of videos on our website on his tools. I suspect there will be an online option, boat on Sunday. So right now, my boat is getting its 1,000-hour engine work, 3 weeks and $40,000 of oil changes and spark plugs, which I learned the hard way. You don't skip. And what I mean by that is I bought a boat, my last boat, which was a bigger boat, and everything started breaking at the same time, and we had a little engine fire, which you never want to have in a yacht. And when we got everything fixed, they asked us why we never did the 1,000-hour engine work. And when we bought it, we were told it was done. So I don't mess with that. So obviously that'll be done. But I also got an offer on the boat. So I'm trying to decide whether I'm going to have the boat or not. I want to get a bigger one. And so I thought it would take me over a year to sell it because the market's kind of soft. And somebody came out of the woodwork already. If that happens, and if there's interest on Sunday, I'm not against going out and chartering a fishing boat and going out and fishing. So um, that's something that we can consider. Probably need 4 or 5 people at least to want to do that. But that will be on me, and I'm fine with that idea. We know what happened last time I wanted to do that. We got the storm of all storms. A little bit about the platform history, because some of you are relatively new. This will be out in Cyberland, and there has been some naming changes. So Praveen and I got together in probably 23, early 24, and he started putting together a scanner for me. And I wanted a scanner of frankly, of my dots that I could run at 3:30 and then be able to put some trades in before the market closed. And next thing I know, he built me a full featured platform. And that's what we put on the market as Market MRI Pro. A number of people started buying it in late 24 and early 25. And I kind of consider the official date May or June. And that's when I started billing. I started the clock back to June of 25 for the data. So people that started in late 23, early 24, they had about 16, 18 months before they paid for their second year of data. Um, in fall, I announced that John was going to put what's essentially his TradeStation package enhanced into MRI Pro. And we had a special beta opportunity at Black Friday that was well subscribed. And then they became our beta testers. Early 2026, John and I have different backgrounds, and I don't think he liked all my, well, he didn't not, it's not that he didn't like, he didn't understand why I named everything after medical things. So we rebranded the company as Sweeter Trade. So you have both marketmripro.com and sweetertrade.com out there. but we came up with a single product called Sweeter Trade that combined the parts of MRI that I brought and then his tool set. Now, at the time, I'd say the average price paid for MRI was around $1,500, give or take. Some people paid $19.95. Somebody actually bought it at $26.95, but I felt bad and I gave him a deal on the upgrade. But we put the new product out at $38.95, although it's $31.95 until the end of the year. And it is going to be, if you top down trader, you get 200 bucks off. So it's $29.95. A lot of people were, I think, shocked at the price point. But if you knew John and you knew that his TradeStation package was $3,500, there was no way I could look at him at a straight face and say, let's just add it to the program and not charge more money. So that's where the pricing came out. It's available today for lease or purchase, but like I said, at a higher price point. Now, a lot of people have been emailing me about, hey, can we get in at the old price and then later on upgrade to the full product? So what I'm willing to do, and it's got to do with the old users as well, is we're going to rebrand over the next few weeks Market MRI Pro as Sweeter Trade MRI or something along that. And it'll be the exact same tool set you have right now, but it's going to look just like the full version. You just won't have John's tool set. And I'm going to let others in if they're interested, or at least for now, at the same $1,500, which was kind of the average that people paid. And that's including the top-down trader discount. Your data starting year 2 is $495. What I really liked about doing this is, although we have a option to have quarterly payments as a lease, it's like, I think it's $585. I can do the lease here at $300. So basically paying $100 a month. Now, if you do the math and you realize that over 2 years, you'd be paying $2,400. And if you buy the program outright, over 2 years, you're paying $2,000. You're cheaper when you're 1,500 plus the 495 data. You're much better off buying it because in year 3, you're still paying 300 a quarter. But if you buy it, you're paying 495 for data, which is cheaper. And you got to design it so it's attractive on the monthly number or the quarterly year, but you never want to make it cheaper to lease than it is to buy. If you're an existing MRI Pro customer, you're going to transition to the same exact tool with a different name. If you haven't yet, it's coming soon. Again, it'll be exactly the same tool that you have. The splash page will change some because we'll call it out a Sweeter Trade. And then what we'll probably do, and we're still thinking about it, maybe change the name of Sweeter Trade to Elite or Pro, Sweeter Trade Elite or Pro, so we identify those that have the full version. So if you don't think that's crazy or haven't confused you and you don't have the product yet and you're interested, just email me and I'll send you a link. If you own any of the product, if you own the complete product, if you own just the MRI product, you get my TradingView tools at no charge. So that's the other thing. And I don't think a lot of people, well, certainly not everybody has exercised that. And all you got to do is email me. I know who owns it. Just let me know that your TradingView ID. And if you don't have the tools, why not? They're the same tools that are inside MRI. So it allows you to duplicate the chart. Enough of that. The website for Sweeter Trade is up, and on that website will be the videos once Praveen places them. I will most likely make comments about that when it happens inside of Top Down Trader. I'm not changing that name. And so again, the quarterly access, it's $685. I was wrong. $585 for the first quarter. And if you don't have the product and you come in either at the 300 for the base product or the 585 discounted to, actually it is discounted to 485 for the first quarter, that will count that first quarter. If you change to ownership in the first quarter, that will count towards the purchase price. So if you did a quarterly at 485, and before the end of the quarter, you upgraded to the 31.99 minus 200, 29.99. You'd pay me the difference between 29.99 and 485. And on the combined version, and it's got to do with some of the support John and I have plans. It's essentially double the annual. It is 895, I think, for the annual fee on the combined version. And we've got a lot of things that we're going to bring in. So any information about any of this, just email me at marketmripro@gmail. And if you have problems installation or anything, um, consider, go coding at marketmripro.com. So my interest is to build in something with unusual options. One of our users is a speaker in another platform for options, a platform that I used to do some stuff with as well. And I would love to create some type of an indicator that calls out unusual option activity and prints on the chart, as well as scanning for unusual options. And then I've had bad luck with programmers. So there's a guy out there who has unusual options and then an option flow product. It's relatively affordable. And then he put out there how he was willing to build anything, da 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 da. So I paid for the initial build out, and then at least he sent my money back. He changed his mind. So I'm looking at how to take that scanner where I have the specific option trades I put in, have it pull the prices down automatically and help you pick which one makes sense for you. So that's still on the list to get done. That was my attempt to go around and get it done quicker. It just didn't work out. All right, so hopefully see some of you in Florida. So that's it on the deck. The rest of it is to go through the body of the program. Now I do have the deck out here that I did in Phoenix, so I can show slides if there's questions about things. But I'm going to start just like I do my videos with the daily briefing. This should be quick. Let me tell you how I use it, a change that I've asked for, and then we'll continue to move through. There is it's not a bug, but you'll notice when you start it, and every time you change things, there's columns change size. I hate that. It's in what we have, Praveen has built much of this, but sometimes that means you find ActiveX functions and other things that are out there that you stitch together in the product. And he thinks there's a new version that might fix it. But what I do is I come in, I highlight 1-day close. I like to bring the best performance to the top. And then I right click and I best fit all column. Now, what I don't know is why we can't have that as the default. And I'll say things during this that are meant for Praveen so that when he listens to it, in case I forget to bring it up to him. There's a lot of information here. I want to know what moved today, what's moved over the last 5 days, where did we fall in the range, how big of the range percentage-wise was it today, and where did we fall? When you end at the high of the session in the 90s, that's more meaningful to me than when you end in the 40s, meaning in the center of the session. That's it. You see the high, the low, how much changed from the open. That's all fine and dandy. I don't care about that stuff. 1-day close, where are we at in 5 days? Where's the closing range? And, Bitcoin is in there because, well, I don't do much with it. I got a few coins somewhere, at least the numbers but I don't trade it. My son probably trades it. I've got some ETFs of indexes, the dollar and volatility. I've given Praveen a couple of other things I like in there. We'll see if that ever happens. This thing here, I'm very into the 52-week new highs and new lows. And I believe, strongly believe that they are an important breadth indicator and that in a bull market, and even before the bull market starts happening, you're going to see the new highs exceed the new lows. And I only look for this piece here at the 52 weeks. We'll talk about how I use the 13-week later. So what I've asked Praveen to do is this is the bar I look at. NYSE and NASDAQ, new highs and new lows. And in fact, it turned positive. The new lows have disappeared. It's great. The fact that the NASDAQ turned positive is great, but it should be 100 or 200 if we're in a strong market, not what we see here. But what I really want is to know, where were we yesterday? What were we a week ago? And what were we a month ago? So I've asked him, instead of showing me 1 month new highs, 3 months, 6 months, and 12 months, I've asked him to just, if we can, to show me where we were before so I can get a sense of this is going higher or lower. Now, the reality is I do my videos almost every night. And on those rare nights that I don't do those videos, I'm doing the same evaluation. So I kind of remember where it was yesterday, but to me, it's an important piece. And then down here, having 3 different index components, the 1500, the NASDAQ, and the NYSE, this has really been critical, the numbers that are up. Again, the advances versus the decliners. And what has really been the story of this choppy market is there is a lot of earnings strength out there, especially when you think the data center part of the world. And but the overall market breadth keeps declining. So these indexes are being pumped up by an increasingly smaller number of stocks. Now the AI tool is pretty good, and I know that not everybody's a fan of it. And I agree because it's got limited back time. I think Chris only has 10 or 12 years. And I've got 30 years in my brain, and that's just because I'm older, but some of you may have even more. But I think it's been pretty clear, and I like the message, which is when this pattern has occurred over the last 10 or 12 years, the markets sell off, but it's usually not a collapse. It's usually a narrow sell-off. And so that's kind of what we're in probably right now. But I think when I start to see these numbers go up, when I see consistency here going higher, then I'll know that that's time to start being a lot more bullish. The sector and industry components for each of these are also interesting and showing you how they are today versus yesterday. I'm more concerned with the advances, and I think that's more meaningful, but that's what I do with that column over here. Above the bid line, I don't talk about it every day. I will talk about it at extremes. So when we get 80 or 90% here, we're getting ripe for a correction. And when we're down to 10 or 20%, we're probably ripe for a bounce. Most of the time, it's going to be in the middle, so I don't comment much. Down here, ETFs and themes. The ETFs are based in the S&P 500. The themes are all the stocks that we put together, or in this case, these are ETFs. And I want to talk about themes for a minute as well. And again, I do the same thing. I rank them by 1-day change. I hit the best fit all columns. Thank you, Randy. I mean, I think most of you guys always register because I have a fair number of registrations. And like I said, there's not a lot of people that follow me. I'll stretch it out like that sometimes because I think it looks better. And again, I wish the formatting didn't move around, and that's one of the things that we're trying to address. It's not a big deal. Now remember, this will update. All these windows will update during the day. Our data feed is not real time, but it's pretty darn close. And for my type of trading, it's just fine. And if we went to real time, you'd have to pay more and you'd have to pay all the fees to the different exchanges. This little thing here will update it during the day. You saw how fast it moved. That's about what it takes to update. Obviously, it's not going to change at this time of the weekend. Um, so I look at these again. If I change things, sometimes I got to do best fit. And I just look at what the winners are, what the losers are. I think themes have become more important than sectors. And here's why. In HGSI land, we used to talk about wolf packs. And when you'd have, right now, there is a wolf pack starting to growl, and that wolf pack is fertilizers. CF, MOS, among others, are starting to firm up and look interesting here. And they're part of materials which have been leading. You can see materials were up 4.45 over the last month. The big positive over the last week, 1.9%. But wolf packs sometimes are not all in the same sector or industry group. Think about data sets. I'm just moving to lower the temperature. All my hot air is making it hot in my office. And it's funny, I've got this great house with 5 air conditioners, and my office was always hot, whether I was making hot air or not. So my wife gave me a mini split for my birthday. Makes a big difference. I like themes. If I think about data centers, and I think you know how much I've been playing data centers this year, right now, not so much. It's energy producers, it's uranium, it's semiconductors, it is optical cable, it's copper, it's utilities. It's construction, it's John Deere, it's more than just one sector or industry group. So I like how themes capture more. And there are programs out there now that allow you to right click on a theme and see what's underneath. Um, we're looking to find a source for that because I tried doing it by hand and I don't have enough time. And I tried doing it with AI and it's okay. I've shared that with Praveen, but there's got to be a better source. So if we can find a source that just like the industry group theme for themes where you right click on it or in the top down analysis is having themes instead of industry groups on our bucket list. And there's enough companies popping up that are doing that in their skinny little programs that it's got to be out there and we'll find it. So I love the themes part. And so that's this screen here. I don't do much during the day because of my day job, but if I want to have a screen open to tell me what the market's doing, this is a pretty good screen. And again, it will not update by itself, but it will update pretty quickly if you click on that. Timing briefing. If you don't know how to use this by now, then you're not watching my videos. This is a critical part of the product, and it's something that I talk about every night for a long time. I haven't talked about monthly for a reason. Look how far the monthlies are away from the yellow WMA. It would take a pretty, well, from 765 down to 666. So 100 points. So 14% fall on the spider for us to get anywhere close to that. So we're not going to flip to a sell unless we have a major correction on the monthly. So I'm not going to take you here very often, but what I'll take you here is to talk about long-term money versus short-term money. All right, that is going back to March of 1999 and the monthly closes on each of these ETFs. Now, I don't think there's anybody on this call that would be disappointed if they put all their money into any of these on January 1st of whatever year you pick, where this thing started going higher, and sat in it. On the same token, I remember that they called this area here, and anybody that invested in the last decade was flat in the last 10 years. And if you look at short periods of time, going back to the Great Recession, you'll see blocks of time where had you put your money in right here, 10 years later, you still have the same amount of money. But for the most part, we've been living in just an amazing bull run for a long time. Yes, there's been pretty significant pullbacks from time to time, COVID, et cetera. So why do I have long-term accounts that I ignore? Ignore means I let money managers manage them. And no disrespect to those of you that are money managers. The money manager's job is to not have cash, because who wants to pay a fee for cash? So the money managers will follow portfolio management, and maybe they'll move the money around a lot. But if they move it too much, they create taxes. Nobody wants that. So these guys are the experts at buy and hold. But during the last 20 years, 15 years, that's worked. What happens when that stops working? But right now, I don't bother with monthly charts because they're just so good. I ignore them. The weekly chart to me is the most important because this one determines direction. Now, I'm sure people made money going short the last 2 months. Frankly, I don't know how, but I'm sure they did. But I will not go short the markets when my weekly model is green. Why? Because if you go back long periods of time, if you held on here, why didn't this flip? Because it closed above the WMA at the end of the week. If you held on, you probably were happy you stayed in it the whole length. I don't short for this move here and this move here. Some people are much faster than me. So I look at the weekly to tell me what to do right now. And right now, the weekly tells me don't short. Weeklies are long. Now, I'm not stupid and I'm not ignorant. I see these distribution days, and I know that if you get a lot of distribution days, it's associated with a pullback. I know that this here was the follow through day. Actually, nope, I'm on a weekly. This is probably the follow through day here, but we're going to look at that in the dailies. I don't look at follow through days on the weekly. And I'm going to talk about my line in the sand in a minute, but the weeklies tell me it still be long. Yes, we're in a junky market. I don't have to be all in. I could go to cash. I'm just not shorting when each of my weeklies are long. The dailies tell me conviction, and the dailies suck. All right. We are in a sell on each of the dailies. Remember, the top is the bongo, the trend. So we've gone to a downtrend on all four: Spider, Hughes, Diamonds, and Russell. The yellow is the 30-period WMA, and the green and red is buy and sell. So we are long the Spider. I thought we might have flipped, but we bounced on Friday. But we are short everything else. We are also in a short-term downtrend on all four. So what does that tell me? Well, I listened to Sager's AI video this morning, and it's AI. I don't know what he does, but it sounds like he creates the presentation and he lets some AI female voice give it. I actually miss his voice. And he basically, when it got to stock picking, he made a comment: I can find some things that look good to short, some things go good to long, but basically not recommending I do anything or you do anything. And he showed pictures of where he lives in Thailand instead of stock charts. So that should tell us a little bit about the market right there. I put that line in yesterday. Let's talk about this line. I think that's a very important line. And I didn't realize it until I sat here and stared at the chart. But this was the last high here. We broke out here The follow through day gave us an all-time high. So how cool is that? We had a follow through day and an all-time high. Now, I still struggle with the idea of follow through days at highs, not after sell-offs, but there was a sell-off here. If you notice, the high of the last high and the bottom of the follow through day are within a few bucks of each other. All right, this one, the high was 760.40 and the low was 760.52. There's 12 cents between this. I think that's my line in the sand. For, not, it's the first line in the sand. And as long as we stay above that line, I feel pretty good keeping what longs I have left. If we lose the follow through day, I pretty much lost the reason for why I added to my longs. The next line that I'm going to worry about is going to be this bar here, is I will better be in all cash if I take out this line, because this means that we lost the low of the day before we started the 4 count. Remember, follow through day can't occur until day 4. So I put those lines on the chart. We're still above it. So if you want to be long, I'm okay with that. I just think it's risky and we're choppy. And I think having a lot of cash is good too. The Q's, little different looking. The Q's, all-time highs back here, and they're struggling against this line. So until the Q's break above this line, we're in a downtrend. For some reason, my 21-day came off of this. I wonder why. But I would look at the 21-day EMA. But as I look at the Q, and that's weird. Oh, I know why. Dummy, I'm a dummy. Quash that for a second. I'll show you that in a second. So I'm looking at the dailies as telling me to be careful. And right now, my portfolio, and I made this comment yesterday. I'm very fortunate in a lot of ways. And this little account that I run as part of my teaching, I hate to say it's play money, but it's play money. And I started with 150. It ran up to 2.4 right around the time of the June event. Since June, it's kind of gone sideways in the choppiness. I took out a lot of cash and I bought myself a new toy. I still have a lot in the market, but I'm look at it right now. If you include the money that I took out as cash, I am well over 50%, 60% in cash right now. And I had to take the cash out because that toy comes this week and I have to pay for it. But and I feel comfortable having cash because I think this choppy market is just difficult to trade. Let's go more detailed in the index ETFs. That's where I said, oops, I was looking at the wrong chart. So this one has a lot more lines on it. It's got that line here that I talked about is sort of my short-term line. Notice that in blue here, I put a 21-day EMA. And why do I do that? Because Mike Webster does it. Those who don't know Mike Webster, I talk about him all the time. To me, he's one of the more approachable. I can't say he's the most smart, because there's a lot of smart guys that came out of O'Neill's shop. I just think he's so easy to listen to. And I did it yesterday. Let me just do it again because I think it matters. If you go to YouTube, and I'll go to my subscriptions, and let me show more things. Any porn, I have no idea how it gets in there. At least that's what I tell my wife. And I go to subscriptions, and the first one I pick is Investors Business Daily. All right. So Investors Business Daily, you can search it by Investors Business Daily, investors.com. Every Friday, if he's not traveling, Mike Webster does stock market today. You want a great quick analysis when the market closed, limit it, okay? Because he won't go as broad as I do. And he talks about a couple of stocks. Mike Webster, I think, has got one of the best brains in that whole company. And I get to hear him live in San Francisco again soon. So Mike Webster, I watch him like clockwork. Two other things that I showed people that I would want to watch. There he is again. He doesn't look anything like his picture in this thing anymore. Um, see, he's hairy here and old. And in the picture they have here, he's clean cut and young. But this swing trader status update once a month, swing trader is a paid service, but this shows up for free on the web. Again, a nice review of the market. Then this is the other big winner, James Ropel, who charges close to $200 a month for his service, actually does a free one once a month. So I find these to be very useful. Some of the others, I listen to it most days in background because it might give me an idea of something I'm not thinking about. But I find that to be very useful, that site. And then another one in my, let's see, subscriptions is, what was the other one I showed? Oh, yeah. 1 second. Let's just put Webby. Webby rambles on. Mike Webster has 88 episodes here. They are awesome. And I watch them every Saturday or Sunday morning. Their background when I'm watching, going through my charts. This week was training with a full-time job. He's recently done a lot with other people, cutting losses. He's got all kinds of topics, but I find this to be very helpful. Steve Sweats, maybe someday he'll be considered one of the market wizards, really smart guy. So, and why he does the 21-day EMA, hence why I use it. These are great videos. Watch them. They're free. All right. So hence why I have a 21-day EMA. We had pulled into the 21 EMA on Thursday. We bounced a little bit on Friday. So again, I have this line in the 21. So to me, and I like putting little boxes, there's something in here that I mean, I think that's a pretty critical area. This is the 50, which would be my next target. Notice how we broke through here, rallied, fell to the 50, went way below it and closed at the here and quickly got back. The 50 is often a place that we drop to. And then this is the 100 and this is the 200. Why? I got to have potential targets so I know what to do. And then remember, you just move it to the left if you put seasonality on. And what you have here is the light number is all-time seasonality. The green is 10 years, the yellow is 5. And you could see that the spider is sideways perhaps for another couple of weeks. And then it pulls back hard into the middle of October when it starts to rally into the year. Now, the fact that all these three lines are kind of consistent is important. If I see one going up and one going down and one in the middle, then seasonality is meaningless. If I only see one line, it means there's only one period, 5 years, that's available. Two lines, well, you always see two lines, it'll be 5 years and all time. If you don't see two lines, then it's all time, but it's less than 5 years. So that's helpful to me. And that's what I get out here. I know already the daily bond goes red from the last screen. Volume, I don't pay that much attention to this volume. Frankly, I don't trust it. I don't really look too much down here except for the squeeze. And to me, it's all about price and volume. And by the way, the dots are important. I'm not discounting them, but the dots are so I can scan and find patterns. Once I find the pattern, I look at the chart. Um, Note to Praveen, um, something's wrong with us turning off the power trend. Um, the power trend is on right now, and that's what's down here on the bottom, but it should have been off here. So I've asked Praveen to go check the code. So I put this on for Praveen. The next thing I'll look at is the cues, which I was talking about being a little bit tougher right now. And clearly downtrend, trend line resistance. Right now it's sitting at the 21 and the 17 and the 50 are all here. There's the 100. So it would not shock me for us to drift down to this 100. Now I figured we wouldn't get there until we're further out here, and probably the 100 is going to be here. This is going to pull back, and this is where my target is if we go lower. Remember yesterday, one of my discussions or slides was about the three-road scenario. Not gonna, I mean, I would love to see that happen. All right. I still have a long-term portfolio. I would love to see that happen. That's scenario number one. Do I think that'll happen? No. We could do that, which is basically this, but it just shows you it doesn't go up in a straight line. That comes down, and we're going to struggle to get above that trend line. So that's scenario number one. Okay. Scenario number two is the bad scenario. And maybe what happens is we run up here and we go right down here. I think that's probably more likely than scenario number one, but the most likely scenario is probably or that we continue to sideways chop, and then probably with seasonality. So my concern or my guess is that we've got what I think is going to be a horrible election coming up. And one of the things that I think is going to be horrible about it is that, um, again, I'm not political. I don't mind telling you where I sit. I sit in the middle. That's not a cop out. I am fiscally to the right and socially to the left. I bet if I asked you to raise your hands, so are most of you. Unfortunately, we don't have politicians there. I will tell you, partly because I'm Jewish, that the Democratic Socialists scare the hell out of me. Their agenda, frankly, is to get rid of Israel. So I think that this is going to be at least for my household, it's going to be a very interesting election, um, and scary. And I also think we got Iran still not going to go away. We got a major debt issue. I think the negative scenario is probably in the cards. I hope I'm wrong. The diamonds, you can see I put my target in here. We got back above the 21, but we got the same thing. We've got seasonality falling into October and then stumbling around, and then starting in the second week of October, it's off to the races. This is the worst month of the year. And in the midterm of a election year, that's not surprising. And so why would we think this market's going to rally to new highs right now? Of course, it'll do whatever it wants. Interestingly, the Russell is much shallower here. So small caps might outperform if the markets weaken. And it's sitting right above that 21-day EMA. So I think we've got potential concern. So what am I doing in these windows? I am doing, for me, a deep dive into moving averages, support and resistance, and seasonality, and helping me understand what's going on in the market. Does a high jump matter? Absolutely, but it doesn't matter unless it's at an extreme. It's at 45. It doesn't tell me anything. Webby will tell you why volume doesn't matter anymore. I still think the squeeze matters even on indexes. That's why I've got the line there. And although I don't spend a lot of time talking about the dots, I think the dots give me a good idea of what's going on. But again, I use the dots as a scanning tool. I use my support resistance. Like here's a support line. Are we going to bounce off this and go higher? We could. So that's how I use this. The VIX, George would say, George Lee, good friend to many of us, when the VIX is high, it's time to buy. When the VIX is low, look out below, meaning it's going to go lower. That's true. But to me, when the VIX is low, we're going to be just fine until the VIX starts to go up. And when the VIX is high, we're losing money until it starts to go down. So right now, the VIX is low. I talked this morning or yesterday that it's got to break through trend lines, and it keeps failing at the trend lines. So look, I think the cards are against us right now. I really do. On the dollar, and maybe the way we get out of this is we devalue the dollar. I hate to become the Weimar Republic, but we have a lot of debt in this country that no one wants to deal with. I'm 68. I know there's people older than me. And is it 32 or 33 when Social Security fund runs out of money and there's a mandatory 30% cut on your Social Security? That isn't optional. Unless Congress does something between now and then, your Social Security payments will be cut 30%. It's neither Republican or Democrat. It's an American problem, but they keep kicking the can down the road. I'll survive a 30% cut in Social Security, but I know a lot of people that won't. The dollar is weak, and that helps us in certain things. But it's been running up this trend line. It just broke down below that. But like I always like to point out, that looks like the dollar is strong until you bring in more data and just flip to it. There you go. You can kind of see the dollar is well off the highs. I'm using here DX USD, and the reason I did that is because of this. Oh, they fixed it. All right, now I can switch back. There was a really bad data set, and I couldn't fix it. And I guess our vendor fixed it. So you could use um, the ETF, or you can use the USD. What is it even called? The dollar USD. They look basically the same, but I like this one. So that's what I do in the ETFs tab. It's mostly chart visualization, support and resistance, and trend lines. Commodities. Started buying gold and talking about buying gold when it broke out of my box. Just like I think the S&P is going to stutter. I thought we would stutter here, but because of what's going on, we blew right through gold. So I've accumulated a pretty decent sized position in gold. I don't fool myself to think that it's going to go on forever, because I remember this. This was gold 5,000. This was everybody going crazy about gold and silver and this massive run up. And then we basically gave most of it back. But gold right now continues to look good, and I have gold. I do remember something that Fred Richards, great trader, told me, and he talked about why his family has gold bars and not ETFs. And that if something does happen bad, and I'm not saying anything bad's going to happen, and anarchy, the ETFs are pieces of paper. But gold bars are what gets you out of trouble. So maybe I should have more gold bars. It's the same thing with Bitcoin, I'm afraid. How's that going to get me across a bridge if I'm going to be persecuted one place and I want to cross? A lot of families got out of Nazi Germany because of their jewelry, hard fixed assets. So gold looks pretty good. Silver still has to get above the 200, but it's basically the same pattern. It's just lagging. And this was just a crazy drop, unbelievable drop that we saw here. And I remember everybody was hyping gold and silver, and of course they were. What a run. Not sustainable. So I don't spend much more time than what I'm doing here. I just quickly look at support and resistance. Oil, we know, has been on a run. It's right up against resistance. So if you're a betting person and you had a doji at resistance, where do you think oil is going on Monday? Well, my bet is it's coming down some, but there's so much news tied to it, I'm going to watch. And I know that if gold spikes because there's some missiles firing at ships in the Straits of Hormuz, then oil will go higher. But right now, oil has run into resistance. That to me might be helpful to know that. Natural gas, I say it's dead to me all the time because it's dead. Hard to believe because Russia plays games with Europe. We're the Saudi Arabia of natural gas, but it is hard to transport it overseas. And we've got all kinds of regulations and laws they would have to ease. So, at least in the US, natural gas and UNG are still low. To me, it's not a tradable asset right now. And then we got this 10-year. Again, I don't need this stuff here. This is telling me the story. I put on a weekly. You can see we've gotten higher, but look how long back to get higher. You got to go back here to January 25. That's not higher, by the way. Is it? I guess it is on the weekly. I'll look at the 10-year. That is higher. So you have to go back to January 25 to be higher. And then this here, and in fact, let's see what happens if I do a trend line. Now that's kind of interesting. So we broke out of resistance on the 10-year. I think we got to be nervous about rates. I'm not telling you something you don't already know, so I'm not. But I look at this and I think this may be even scarier than oil. We're running up to this triple top here. Are we ever going to break out of that triple top? So far, it's not. But we got a trend line coming up. We got a wedge. Last time I checked, this is a bullish continuation pattern. So we'll have to see. A break higher is not good for you or me. And then we look at, and you can see I looked at the 30-year, and I used peach because I have enough white lines. And let's show you where this one goes back to. I better switch this to weekly because that peach line, that weekly, better put it on this chart now. Color it by touching the pencil. When it came off, it's because it's too high. Da, 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 da. Oh, we've got a winner. Do you see the date? The last time the 10-year was this high or 30-year? Do you know what was happening in the market in June of 2007? This is my favorite feature in the whole damn program. This here is June of 2007. You see all the distribution days, and we were running up to the big collapse. And look at the Hindenburg's coming in shortly in July. Hindenburg's came in June, And then we had the great financial recession. Not saying that we have to end up there, but should we be worried? Yes, we should be. There is a reason why the US Treasury this week tried to buy back the long dated instruments. This was the US Fed stepping in and buying 30-year bonds. If you buy them and you create demand, the price will drop. Excuse me, the price will go higher. If you create demand, the price will go higher, the rates will drop. It lasted for 2 days. This is probably the biggest problem right now in the US markets. One man's opinion, and I'm not an economist. All right, I'm looking for questions. If you have questions, ask them. The buckets, we talked about those yesterday. What you're looking for are extremes. When you don't see extremes, you spend no time on them because they only matter during extremes. And if you remember the math, this is when I screw up my snagging. I'm going to be very careful here today. 95% of the time for most of us, but because of what they call fat tails, or even call fat tails, 11%, 5.5, 5.5, 11% of the time, stocks are beyond 2 standard deviations of the mean. That means 89% of the time, they're in it. Okay, this is below, this is above. From 1 to 10 are the 10 deciles between 0 and 100. You're not supposed to have more than 11% between the two of these. When it starts to look like this, this, and you got 76% below the bands on the NYSE, 79% on the S&P 1500, 54% on the NASDAQ, and 60% on the Russell, you should prepare yourself for the market to go higher. However, that's only if we're not in a recession. Because if I go back to that 2007, 8, and 9 period of time, which sucked in this country. I'm trying to figure out how to do this without making a boo-boo. Hold on a sec. I'm just going to pull this over. That's the safest bet. You could see that we got progressively higher with 70% of the S&P 1500 below. And this here was October 7th. And on October 10th, we started the big move on this date. You could start to see the other groups piled up. So even though I can jump up and down and say that this is a very oversold market, it could be several days of getting worse before it resolves. But that, to me, not being in a recession was as low as it was going to get. Here's the next day. Not a big change. 79, 82, 58, kind of about the same. Here's the next day. Clearly, the markets rallied. So you can see the difference, and that's what I wanted to show you. If you have a very extended overbought market, it's going to do the exact opposite. You're going to build up over here. So I find this tool to be incredibly useful to help me understand what's going on in the market. And just to reiterate, there are two steps you'd have to take. Step one, change the date. Step two is hit the green thing and update your chart. In the original version, it was just changing the date, and then he put the green circle on, which I'm fine with. I think there's a lot of information in this chart. Unlike the old school that I used to do, where it was just the S&P 1500, we've got the NYSE, the NASDAQ, and the Russell. And I would say I do it that way for the exact same reason of why we have the Hindenburg on the NASDAQ. I think it's short-sighted to not believe that this matters or might matter in other areas. All right. Let's go talk about finding bottoms. And again, if you have questions, I am watching your questions. I didn't think this was that great when I did it in Phoenix, but the review said this is what people like. That's why I'm going back and looking at every window. Let's talk about what I've got on my charts, because yours could look different. I have a 50-day simple and a 200 simple on every chart. By my conventions, if it's a black chart, the white is the 50-day and the red is the 200-day. Keep going down. I have that 21-day exponential, which you could see is blue. You can change the colors down here. I have a purple, which is supposed to be green, the 17. I got it. Do I have the 17 twice? Typically, I make my 17 green. I wonder if it's on there twice because it looks like it's green. But I have a 17 simple, 50 simple, 200 simple, and a 21-day EMA. I have my trend line support and resistance turned on. So when you see the solid straight lines, most the times the moving averages are not perfectly straight lines. Typically when the line sets, it's written as a solid line. And when it breaks through, it goes to dots. I don't totally understand what Praveen did there. So maybe one day I'll have him on these to talk about what he did. Because I use the weighted moving average in the buy sell, I will sometime put it on these charts. And all right, it's the lightest green. So you could see one thing that I wanted to prove once, which I did. People used to say to me, why do you use the 17-day simple? Why not use the 20 or the 10? I don't know. Why not use the 21-day EMA? And then when I looked at the 30 periods weighted, they're all almost exactly the same. This bundle in here has the 17, the 21E, and the 30W, and notice how it runs pretty much together. It separates when things start to base, but when we're moving, it's pretty much they run together. And then the distribution days and the follow-through days. We won't see distribution and follow-through days, and it took me a while over the weekend, but we won't see a lot of them. Oh, you'll notice that we stopped getting volume on the NYSE. So note to Praveen, can we get our volume back here? I don't know if we can, but you won't get distribution or follow-through days because our data vendor stopped reporting volume on the NYSE, and those are required. Hence why you see all the distribution days here. After volume, I've got stocks above the moving averages. I got stocks percent above the 20, 50, and 200. What are you looking for? Let's go to April 7th again. By convention, we put it in the center. This bundle here, I looked to the left. And as this bundle became increasingly further to the downside, it told me that we were getting extended to the downside, meaning the stocks above the moving averages were starting to become meaningfully too low. I don't care what the absolute number is, it's meaningless. It's how does it compare to the left? And when it's the lowest it's been, it's meaningful. Here are the new high, new lows at 52 weeks. You could see as we were bottoming, we had a crescendo growth in the number of new lows. The AD line's not as helpful to me. There's probably more red than green here, but it's not as simple to see. AD lines, I'm looking more for divergences, and here it's more complementary. Here is up-down volume, and it's interesting, the big reversal day that came 2 days later had big up-down volume. And then all those Ian toys, Eurekas, exuberant buying. Well, this was a little bottom. So that was a good sign, but it failed the 50. Still having the distribution days. The break of the 200 should have gotten us nervous. And then you look down here, the bingos came in, the baby out with the bathwater days. And then we had a phoenix at the bottom. And what I talked about yesterday is when you get exuberant selling at the bottom, then that's telling you something. And how do you know it's a bottom? You have exuberant selling after a big sell-off versus selling that occurs earlier before the market is sold off. Then you had the Eureka, the exuberant buying. The little triangle that's hidden there is called the defib. Here's a defib again, that's homegrown Praveen, 99%, 1% Jeff. Here's a Zweig thrust and the follow-through day. I'd rather get in down here than get in up here, but reality was no matter when you got in, you made money here. But it's these things all coming together that helped me understand. Anybody think of a market top? When was the last big market top after a big run up? Give me a date. And I'm going to answer Steve's question. So the question was the failure of the bond buyback by the Fed and how this affects the US dollar. That's a great question. The buyback by the Fed, to me, was interesting, but not by the Fed. It's not by the Fed, it's by the Treasury. So remember independence. The Treasury reports directly to Trump. Oh, so Besant is Trump's guy. And although he's Trump's guy, both of them came out and strongly said that the decision to buy back buy back bonds was Treasury's decision, independent of Trump. That was an attempt to lower the long part of the curve. What did Warsh say during his first talk after a Fed meeting? He said that he wanted, right, sometimes you just have to say you're buying them back for the market to move. Then Warsh said he wanted basically insinuated or said that he wanted the smart money, which was the bond market, to determine rates, and that the Fed was going to stand pat. So you've got the Fed, who I think wants the bond market to take up the rates, while at the same time, excuse me, yeah, at the same time, you've got the Treasury wanting to take down the rates. So you've got a conflict between the Treasury and the Fed, and that's going to cause the dollar to drop. The comment about the $40 trillion in debt is the most important thing that's out there. And I think we're doomed. I really do. You're going to have to find money or devalue the dollar. And I think that long term, the dollar is going down. Um, and that's why that Social Security, again, I am not far left and I'm not far right. So I'm not trying to get your vote. I think those are very big issues and it'll be interesting to see what happens. I thought he bought some, Pat, and then they said they have plenty more to buy, but maybe they didn't buy anything. I think the dollar's in trouble. And maybe that's good. It makes paying back our debt cheaper because we're using cheaper dollars. Um, so that's how I use this field. And no one gave me a date of a high. So let's go on to, let's look at weekly charts and let's pick a time that we had a significant high. You mean like right now? I don't want right now. Let's go back. All right, this was a good time. I'm just trying to do the opposite at a big high. All right, let's just go back to more recent times. And I trust the data more in recent times than I do in ancient times. So this here is March 2nd. That must be when what day did we invade? Must be around then. So what happens when you have highs? Certainly not the best picture of it, but you expect to see these things here to start getting higher. You expect to see big increases in the highs, new highs versus new lows. You start seeing the bangos as we're getting buying. You had the Hindenburgs firing. You've got your high jump is at 100%. And that's where you start getting the signals for the sell off. Why was it much clearer to identify a bottom than a top? And there's actually a good answer for that. If you look at every one of these tops, it's a process. It's not one day. Yet you look at a bottom and it can be one day. The April 7th bottom, April 7th, 8th, 9th, 3 days, clear cut bottom. You just pull up the PowerPoint for a second. Very sharp, which is very different in my mind. Exactly. Topping is a process, bottoming is an event. And so it's putting the pieces of the puzzle together, and putting the puzzle together for a bottom, I think, is a lot easier than for a top, because we've been concerned for a top for a while. And look at this. We have topped on the NASDAQ and we're struggling. I mean, you got pretty much got a W and a failure. Boom, 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 and we're failing. That should have broken out while the NYSE continues to go to new highs. It's much tougher on the top. All right. I think there's a ton of value in this here. Ratio charts, simple. Good, 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 neutral, good. Tells me what's working right now. They're hourly charts because it moves much faster than the daily charts. And for the rotation that we're going through, I find that this helps me. Seasonality, I let Praveen talk about it. I just chose September I hit go. I'm not in love with how we display this because it's different than what I'm used to. But these are the stocks that exhibited um, a fair amount of seasonality. We'll pick one. Going to look for the highest edge and tell you what edge is. Praveen fell into the trap of being an engineer, and he over-engineered it to the point where I don't understand it. Edge to me was just multiply the percent likelihood. Yeah, Bazi, I think so. I think everything that you can hold, the whole materials, are going to be going higher because of the dollar weakness. Totally agree. So edge to me is percent likelihood out of 100% that seasonality has been right over the last minimum of 8 years times the average move. So LAR, here's again, Lithium Argentina, not exactly a household name, but you can see how strong the seasonality is. It tells you based upon holdings, the 100 is the likelihood of being positive, and over the number of days, what the average return has been. So 15-day edge of 30 is basically 100% times whatever the 15 days, because it's 100%, then it's higher. 30-day of 31.6, again, somehow calculated in here. I guess the holding days gives you the idea of what we're doing. So very strong seasonality here. I'm used to it a very different way. I just did that to show you how you might use the seasonality. Praveen needs to spend some time showing you. If you click on the details, now we're getting closer to how I understand it. It shows you the various days that you could have bought it, that you would have gotten good seasonality. The 45-day seasonality is looking at, if we looked at the likelihood of being positive at 45 days times the average return, these are good numbers. And it just gives you a sense of when you might want to buy LAR. I don't spend much time there. I'm not as hot on seasonality as I was in the past. I think more people use it and it's less of an edge. I created this. You all probably have it. If you don't have it, trying to remember which is the best way to do it. I guess it's the setting, the new layout. All I have to do is highlight that, give you this number. And all you would have to do if you don't have this layout is go to hamburger menu, new layout, and you're going to come down here. You're going to type that number in here. And then you are going to name it what you want to name it. And you're going to hit copy and it's going to open up on your charts. A lot of information here. I've got S&P 500, 1500, Russell, and NASDAQ. The main reason I have them is for this green line, which is the 13-week new high, new low, which is also down here. For those that have followed me for a long time, know I used to put up the T21, 21, and TC 2000, and pretty much convinced myself over years of using it that at extremes, it was great at calling reversals. And they don't tell you what universe they apply it on. So I decided to apply it at the individual index level. So it's going to be by definition different than what they're doing. But if I overlay the indexes over time, it's been a great tool to tell me when it's time, when the market's going to reverse. It'll take a few, all right, well, it didn't take a few seconds to load, okay. I'll show you what I'm talking about. I have way too many programs, but my wife doesn't get mad, so I don't care. The number here tells you the last day. Above 0.95, I worry that the market's getting overbought short term. Below 0.95, I'm looking to buy. So every day I'm looking at this and they're all neutral. The spider got to 97 up here on this day. How do I know that? Because I can highlight it. Highlight the bar, all the data shows up. I've spent a long time over the years, hardly ever use this anymore. And this is it here. And when you get to really big market sell-offs, you'll find that short term, this is a really good buy signal. And short term, this is a really good sell signal. And I use it to judge when I want to be buying when it's down here and when I don't want to be buying when it's up here. Short-term momentum is all it is. I've studied it and used it over a long period of time, and I just look at the numbers here on a day-to-day basis. This is looking at the individual components of stocks above the moving averages. Interesting, I don't do much with it. This is the AD line. I look for divergences. And this is the RSI. And the bingo occurs when it gets down to 0.35, which you can see doesn't happen very often, considering that the scales here, we haven't been below 0.4, but you could actually get the whole thing here. Here's, what date was this? March 26th. We had some bingos. So I pretty much look at this, the green, and then I'll look at for divergences that are obviously an AD line. I created this layout because I just wanted to quickly look through the mags. I'll do the same thing. New layout. This one's called I think it was key stock, unless it's key stock timing. See, this is the advantage of coming live. And you see, I always conclude my top down initial approach with this because it's nothing new in introductions, but we know this is where the big money's living. Apple sort of in congestion, but looks okay. Amazon sold off right into the moving averages. Will it hold and bounce here? Is it going down to the 50? Google stuck below the moving averages. No momentum right now. Meta is just not doing well. Microsoft, after not doing well for a while, rallied. Pulling back a little bit. Software ITV looks exactly like this, holding up better than most of the market. Netflix became, maybe we should be buying it here. It's broken out above the 50, still got the 200. It failed the 200 last time, which is the caveat, but I know people start nibbling. NVIDIA, we know it's got earnings this week, but what a great place to rally or break down from. It's binary, we don't know. Tesla, I think Tesla is its own bird. Tesla had a huge day on Friday, running right up into the 50. Look, you expect resistance here, you expect resistance there, but Tesla looks like it's going higher. I mean, those are the key stocks that people buy. Biotech, I hope some of you still had some at Labu, and I hope you took profits on it, because this is what happened with Moderna Day, and this is the next day. Biotech remains very strong. IGV software, looks just like Microsoft. Data centers, no man's land, stuck between the 50 and the 21 and the 30W until it breaks out. I'm not playing data center stocks. Defense really sold off this week. Not exactly sure why. And that just gives me a sense of what some of the big money's doing. And I'll rotate those 4 ETFs when something else matters to me. Now, John's layout has got so much in it, but I leave this to him, and I'm expecting those videos to be populated because I won't do it justice. But if you had, here's the power of what Praveen built. Everything is pre-scanned. None of this trade station turning off business. And if I was interested in stocks that have a daily buy, a weekly HCD, and their monthly volume is going up, I got 3 stocks to look at. Autoliv is on my buy list. You could see the PMC is heading up while the price is heading down, divergence or positive convergence. Had a John Person buy, took out resistance and a high close doji, and look at the improvement of volume on the weekly, on the monthly. So I basically very quickly created a new scan using John's stuff for those that know him. I don't know anything about ERNA, cheap stock, or ICG, except maybe I should. Long-term downtrend, improving on the monthly market catcher, actually turned positive on the daily. Volume improving on the monthly. A PPS buy, but it's a dollar stock, so I'm not trading it. So I could have put in filters and I would have left with 1. So the fact that you can on the fly create those scans, because all these fields, HCD, LCDs, PPS buys, trilogy buys, volume up, volume down, LCDs are all pre-scanned for you. So you can create to your own heart content. And you got your radar screen. And if you set up your computer, give it 4 minutes, and this will all be populated. It's amazing compared to this thing where, and I run his scans. I still run the scans. I got to stop that. But let's see, this one was at 4:15. It takes forever, and the computer keeps turning off, which is my problem. Not the computer, I get a execution error in TradeStation. All right, let's finish up here. And there was a question about scanner, and I'm going to talk about that. Actually, let's go to SuperScan for a second. Ignore everything except for in here. I wanted to create some new stuff, and it's still a work in progress. If I click on any of these headings, I have show column chooser. And it's sitting on my other machine, so let me bring it back. All of the fields that could be involved in my scans, John's scans, we haven't thought about creating a scans. Every field is here. I like that. All right. So I can now create my own radar screen. So let's say I want to add a few things here. I want to add, high-low, the volume and the change percent. I want to keep what I got here, but I want to know when we've crossed above the 50. And I would like to know when I have a trend line resistance break or a support touch. and how many days since. Support touch, support break since break. Now where's the touch since? All right. What else might I want to know? How about volume? Maybe I want to know the ATR. Then I want to add on things like HCD, LCD on the daily or the weekly. And I want a PPS buy, which I think is called daily buy in here somewhere. So let me find it. I think it's a signal. Trend is how how many days we're in the direction. How about a weekly signal and how long? How about weekly support and percent from support? Anything else I want to put in? All right, that's enough for now. So I've now repopulated a much beefier radar screen. Now, for some reason, by the way, the ETFs aren't populating on the radar screen. That's a data pipe and it's being fixed. I already talked to him. It's not us, it's the data guy. So if I want to know all these stocks that had a PPS daily today, here we go, my usual problem. I touch something and everything moves. We got to fix that. Where is the signal? So now it shows me all the stocks that had a PPS buy today. So let's say that I wanted to create a scan. If you remember, I did this before. I want last price greater than equal to 5. I want a PPS signal equals 1, which means it turned today. And I want it up, so it's a positive 1. I would like a weekly HCD. I can't remember what the convention is, so I'm going to equals HCD. Okay. And I would like it to have a trend line resistance break equals. I'm going to save this scan. PPS by HCD and a trend line break. Okay. Now, I should be able to apply this anytime I want. And, it's a skinny search, so it only found 2 stocks. But we already talked about ALV was one that I was already looking at. Now, the question is, if I go over to the JS layout and I go to the impulse all stocks, will it show up? Yeah. All right. This was the question. I got to have it so it shows up here too. So it's still a work in progress, but what we're trying to do is allow you to build. I think it will be on everything but impulse and top down. So let's just look at combo buys. And let's go down here. Nope. All right. So I'm going to have to work with Praveen. We're supposed to be able to create that. Before I couldn't save it and you could bring it anywhere. But the goal is to allow you to create your own scans and to incorporate as many of these columns as you can fit in. It's not going to be in every watch list. So more to follow on this, but it's really how do we combine and create scans on the fly. And for those that were on the session that we did a long time ago, and I basically created on the fly, now everybody should have rockets in flight. That's been an awesome list to fish from. And in fact, if you want to have an easy weekend and not work too hard, put this list on and then add trend line breakouts. And now you got 72 stocks to look at. Let's just look real quick. NCTY, I don't know anything about it. I looked at it this weekend. This is why I didn't do anything. There's something going on I don't understand, because all of a sudden it's waking up. So I might want to find out. DK, this is a refiner. Well, look how pretty this is. I mean, 1, 2, 3, about 5, 6 hits against resistance, breaking resistance. This likely becomes support. A PPS 5 signal like that. Massive volume. This is a new thing which we'll be telling you about soon, a new indicator. EMS and CPR fired, volume, breakout momentum. Look at relative strength going straight up. Look at volume. I like that. BGC is an asset manager. BEKE breaking out. I mean, these are all interesting. Copper. This one I didn't understand. I guess it must have just closed, but it's been a great performer. And remember, one of the strengths of this Rockets list is that if you want to see how if this was one stock, not 200 some stocks, and I highlight all of them, let me turn off, and then I go here, I can make a group list. It takes a second because there's 217 stocks. And then this is usually when I'm doing a video, I get bored and frustrated. But yeah, I mean, this is what a leaders index would look like. Now, there's too many stocks, and you could certainly make a better leaders index. But if in general, this is what these stocks create, you know darn well that if you start to look at them as individuals, you can create a better looking list. But that's kind of where I want to go fishing. And so one of the quick routines that I'll do, not on the weekend I'm anal, is I'll put the Rockets in. And if the number is more than 100, I don't want to look at 100 during the week. So I'll put the resistance breakouts on, and I'll have a smaller list, and I'll play with this list. But there are some really good stocks on this list. And I know that they are because in general, they are lower left, upper right. And this one short term is. So back to where I start, I go here. So Pat, great question. The right way to do a leaders index, and we talked about it yesterday for those that were able to join us, was for you to go and find top 20 stocks in the market, 15 to 25, no more than 2 in one industry group, look at each of them, pick which ones you want, drop it into a user list or create a users list. So we have one from the last November's meeting, which was the Praveen Index. And that if you highlight everything in this list, it will create to what you just described. It'll take the daily movement each day and combine them. So what he's done here is, to your point, is he's looked at the daily movement each day. I guess he's and has added it together to give the change on a daily basis. But I will have Praveen comment on that. I don't think he's here. Praveen, if you are here, please comment on it. I don't think you're here. But I would create my own list, and obviously this list is no longer great. It was great on the run up here, but it's not working now. In fact, we created the list here. And this truly was leaders last year, but the next group of leaders is not always the same group, and this thing did nothing for a long time. So this is an old group. These are the same Rockets. I thought I put them in here. Let's see. We could go back to the impulse view. And we got 50, let's put the rockets in. And you don't create a leaders list that you track with 217 stocks, but I could basically highlight all of them, add them to the rockets. And if it's going to like me today, it liked me yesterday. All right, added them. And now it's going to be in the rock. It's not going to change the constituents tomorrow or the next day. So theoretically, you could look at this list and every day look at what's happening with the chart. But again, it's way too many stocks for a leaders list. But now it's going to stay here. Yeah, I know. We've talked about that. It's a good question, Pat. I'll ask him. I can create it by hitting it, but you want to auto generate it for all your lists that you might create. That makes sense. I'll ask him about that. And that is a great feature in HTSI. I agree. So in the impulse list, every day you run a scan, it's going to be different based upon today's results. Once you move it out of the impulse list, those stocks don't change until you change them. So I go into the program and I want to probably do another 25, 30 minutes. I go into the top-down view to talk about my chart before I go too far. Very similar to the other charts you've seen. 1750 and a 200. All right. Green is 17, 50 is white, and the 200 is red. The 21-day EMA is kind of this light blue. I don't know if I have the WMA in this. I probably do not. I have 3 sets of seasonality. One set all from today, one's 10 years from today, and one's 5 years from today. That gives me those 3 that I showed you. This display only change percent allows me to highlight a bar, and then up here, all right, Bozzy, send that directly to Praveen on the weighted 1/3 month RS. Send that to Praveen. We've got a bunch of momentum scans we're working on with various RSs. He might be able to do that. It's a great idea. That's why I said send it to him. I also put a chandelier on here just out of curiosity with kind of the settings. I might put a 3 instead of a 4. And then, so it's basically when I look at this chart, trend line resistance is there. Sometimes you'll see support. Here's support in here. It's auto-generated. Here's my seasonality. So here's a stock. It's not nearly as pretty as an index, and that's pretty separate. And stocks will probably have more. Well, this one's pretty tight, so it follows the same seasonality over and over again. And I think the tighter these 3 are together is the more confidence you should have in the seasonality. This yellow line that's dots is the chandelier stop. We haven't talked much about it. I pretty much don't. Right now, I'm still trying to decide what I'm going to do with it. The arrows here would only be if you have John's stuff, because it's the PPS buy, and that's the PPS sell. Down here is the relative strength, the OBV, and then in my dots, just to review, you have the red candle high, green candle low. So you have a reversal candle here. Now, why isn't that red? Because my convention is if you are higher closed than the prior day, you are white. And if you closed below the open, you're solid. If you close above the open, you're open. So I know that this is a down day that closed below the open. This is a down day that closed above the open. This is an up day that closed above the open, and this is an up day that closed below the open. Just gives me a quick insight. High jump, above 95, I get nervous. Below negative 0.95, or negative 95, I start thinking about when it's below that, then it's going to bounce and go higher. And then the bond goes. So here I typically will, if there's clear delineation of the top three, I'll look at the top three, and then I will rank these by percent change. These are the industry groups in the top three sectors. I typically take the top 10. And I can confidently say these are the stocks in the top 10 industry groups in the top three sectors. Agricultural impulse is, I think, where my fertilizers come from. All right. Now, when I looked at it today, I said, there's really only one standout. Everything else is about the same. So screw that. Let's just look at the top 10 performers by industry groups, independent of the sectors. So it's really not anything fancy. It's just, I want to find the leading industry groups. And so these were the ones we started with. Here are the groups here. I've ranked them by 2-day momentum, FM2, because for me, that takes out the 1-day craziness. And I can go down the list. Goldman Sachs, uptrend, flag, breaking out of the flag and at support. That's an interesting pattern. Seasonality kind of follows the market and then it takes off. All right. Good. There were some Bitcoin things that all Bitcoin things rallied on Friday, including Robinhood. So on the surface, I think this looks good. There's a trend line here that might become resistance, but I like that. thru is another financial holding. AMR is metallurgical coal, breaking out. And FCX was, to me, kind of almost viable, had a big viable gap up here. Maybe it's not viable, but that one was interesting. Tech is another miner that has coal or precious, kind of a cup and a handle breakout. Now, to make sure that I'm not squinting and seeing things that don't exist, which I've been known to do. My wife says the opposite. She says, if I don't want to see it, I pretend I don't see it or I don't hear it. I think that's a husband phenomenon. But here, market search, cup, handle, right in the pivot point. That might be something interesting to look at. And it does have surging earnings, at least into 26. So this is how I find a lot of the stocks I like. Goldman looks good. How's Morgan Stanley? Yeah, pulling, not as exciting. And that's how I start my day or my review. The next thing I do is I make sure these are all not highlighted. Either all highlighted or all not highlighted. Go to the impulse. And I always look here. If I don't see a big number here, I got a filter on. And then my favorite scan, pre-made, is that A+. And it really comes down to 3 scans. My A+ is usually going to be between 1 and 10 or 15. These require, if you think about it, in the HTSI days, they require 2 kahunas in a row. I can tell you when I do my weekend, I look, this is the list. I look at every stock that makes my consolidated buys list between 5 and 250, with $5 minimum and 250,000 shares. I had to raise that this week to 500. It was 946 securities. I looked at every one of them. The number of stocks that have 2 kahunas in a row is single-digit percentages. And if you look to the left on stocks that have that double momentum signal, 2 kahunas in a row is a really strong signal. Where do I get my consolidated list? Well, I wasn't kidding when I used that 4-letter word anal. I have smart groups from HTSI that are pre-produced lists. I've got my own user smart groups that I create, and all these move up into my list that I want. I have scans from IBD. I have other programs I've done scans. I got my stuff from trade stations where I get most of John's things. And then to keep up my bad habits, I download a crap load of scans from the web. I then run them through a program so it automatically strips out and leaves me with just a column of the symbols. I, I have bullish lists and bearish lists. I input all of those lists into consolidated buys. There were 1419. And then I want to scan it by price and volume to get it down to 1,000. And that's where I was. And I look at every one of those Friday night before I go to bed. You learn things from doing that. You learn things from doing that. You did not see on that list what we saw a month ago. There were hardly any technology stocks making that top 1,000. Micron made it. SanDisk did not. These are lists that either I've designed the scans or somebody has published something that makes sense to me of finding bullish leaders. So I'm not surprised that SanDisk didn't make it. It's probably going to go higher just because of the earnings power. So when I came out of that list, it told me certain things that I wasn't necessarily thinking of. It told me that CF, where I said there was a wolf pack, was starting to look interesting. Well, guess what? I have a cup and a handle and a breakout. MOS is in the same fertilizer group. It made the double momentum scan. CNH is, I think it's farming and industrial equipment, and it's XUS. I didn't love this chart. Double momentum, squeeze, great move on relative strength. It's not going to be extended no matter what because it's been basing. It just looked too junky in here, but it may turn out that that's a really good, if I skinny it down, it doesn't look nearly as junky, but a fresh breakout there. And then GEO, I mean, uptrend, a really tight base. I mean, a really tight base and a breakout. I hate what this company does. It manages prisons. It builds prisons. Breaking out right. I mean, this is their pivot. This is typically when you want to look at taking a trade. This here is your stop loss, and somewhere north of it is your target. Well, it's going right into it. 41% growth, PE of 28. If it makes $1.79, say $1.80 times 40, that's $72 stock. It's trading at 35. I'm interested in this. It's got earnings per share growth, some sales growth rate much more than the PE. So I start out there. Then I might want to look at the A's. The A's are more like pullbacks and uptrends. Sometimes there's too many to look at. There wasn't. So Hood was breaking out again, and I like that. This one, too little. It's just a weird looking chart, so I don't care. This thing keeps coming up. Interactive broker, BEKE, I've seen multiple times today. RZLT, cheap stock, I've seen multiple times today. Rivian commented, I don't know why our EV is doing so well, but it's doing well. Maybe it's because they make the Amazon trucks, not sure. Here's my MOS again. Here's that ALV, that automobile. Again, we go into market surge. And cup, handle breakout. Now, they'd probably tell you not to buy it until it gets to this point. I'm good with that. But you're seeing some sort of a consistency between the different programs. We looked at Geo. What's EPC? I think that's not yet. I want to break out. Then I'll look at what we just did, the rockets. And I'm not going to look at right now 217 stocks, but I will, as part of my review, look at trend line resistance breakout. So I'm looking for stocks that are breaking out, and like an FCX that took off. And then because Kathy, I don't know if she's still here, Kathy, rather than pull back to support to buy them. So it turns out I can do that. I can click, whoops, go back. Rockets, and now let's do trend line support bounce. So that means they should be pull up, pull back to support and bounce. Very quickly, KRNY, pull back to support and bounced. Bristol Myers, pull back to support and bounced. Benjamin Franklin, pull back to support here all over the place and keeps bouncing. And then COO Cooper, I think, pull back to support and bounced. So what I'm doing is using the rockets to identify potential new leaders. And I'm using the breakout from resistance or the bounce off support to drastically narrow the list to show me things that are actionable. My hope is that at some point, and it will happen probably that right after I talk to Praveen, that I'll scan down here and that thing that we just built is going to be sitting in there. But it's not there yet. So that's basically my story of how I use the product. You know, I don't know if you were on yesterday, Pat, and don't take it as a negative if you weren't. It's Saturday, you have a life. But I spent a lot of time in HTSI. And I show them things like the group inclusion filter, the smart groups, the top 50. And then I showed how you could dump things into Edgerator and, oh, thank you. And then apply AI. And again, I just want to strongly put the caveat, as Chris mentioned at the live meeting, he doesn't have 50 years of back data so that we can say for sure what something means today. But I do think it's meaningful. I love it. Not everybody does. And you'll see in the video that I did either today or yesterday, there was a comment and I replied. And my reply was not meant to be snotty. My reply was, yeah, but it attracts people because people look for it. That's it. Any other questions that I can answer? So follow-ups. Please register for that Traders Corner meeting. That's a favor to me, and I appreciate it. I think probably all of you have already done it. Second thing is feature requests. We can probably take some more of those. So I'll show you the copy chart option, Marcos. So if you have feature requests, please send them into me or to Praveen. If you don't have the program and you want to come in with the lower priced option, which is the original MRI Pro program, I'm willing to open that window up again, and it's really a test. If nobody buys it at the lower option, it just means it's not worth us doing it. That's not a negative thing. We had an internal struggle with whether or not it was the right thing to do, so it's a test. And I'll continue to do these. I think you all know I don't do these. I don't charge you, obviously. I don't limit you to people that have paid me money to being here. And my wife says I like to talk. but there was that little roly-poly guy with balding head from England who did so much for so many of us. To me, this is the little bit I can do to pay back because he made a big difference in my life. So thank you all. I put up the market review right before we started this, so if you want to see that. And be careful. I think this is going to be a 6 weeks of continued difficulty in the market. That doesn't mean we sell off. It means we have the middle and we chop around. All right. Appreciate all the good comments. I'm going to go get some lunch. Thanks, everybody. Bye bye. Hey, Wojtek, we had to charge you a tariff for being here since I guess our two leaders couldn't get together. What a joke, huh? Crazy for 50% tariffs. Guess I'm not selling Canadians anymore in my computers. All right, I am going to log us off. Bye bye, everybody.